The Algorithm of Deceit. In the glittering towers of Manhattan, where billions move in microseconds and algorithms make fortunes in the blink of an eye, truth is often the slowest currency. In 2022, the financial world was dazzled by a firm that promised to revolutionize trading. The company was Helix Capital Partners, a high-frequency investment powerhouse that claimed to have developed an AI-driven trading engine capable of predicting market shifts before they happened. They called it Nova, the algorithm that would change Wall Street forever. But within 18 months, it wasn't innovation making headlines, it was fraud. His is the story of the Algorithm of Deceit. The rise of Helix Capital. Helix Capital emerged during a time of volatile markets. Inflation fears, global conflicts, and unpredictable commodities had shaken investor confidence. Nova was pitched as the solution, a learning algorithm that read the pulse of global markets in real time. At its core were three people: Daniel Hargrove, CEO and charismatic face of Helix; Lena Vasquez, a data scientist and the architect of Nova; Victor Shaw, CFO, a former SEC analyst turned strategist. Investors poured in billions. Pension funds, hedge firms, even small-town credit unions placed their money into Helix's AI index portfolio. Within months, the firm reported returns of 28% above market average. The media called it the quantum leap in finance. But as the world applauded, a quiet anomaly was brewing. The first red flag. The first to notice was Cameron Wells, a mid-level compliance officer at the Financial Exchange Regulatory Board, FERB. Wells had been reviewing trading activity logs when he spotted a troubling pattern. Helix trades were consistently executed milliseconds before major stock swings. Not seconds, not minutes, milliseconds. Statistically, this was impossible without insider data or pre-programmed influence. Wells filed an internal memo calling it algorithmic front-running. His warning was buried under bureaucratic red tape. 6 months later, investors began complaining of unexplained losses in smaller accounts while Helix's top-tier clients thrived. Something, or someone, was deciding who won and who lost. The investigation begins. FERB brought in the National Forensic Finance Bureau, NFFB, an elite unit that specialized in uncovering digital market crimes. Leading the case was Dr. Adrian Holt, a forensic accountant known for dismantling Ponzi schemes and crypto laundering rings. Dr. Holt's first move was to subpoena Helix Capital's transaction records and trading algorithm documentation. What arrived was 80 terabytes of encrypted data and an NDA thicker than a phone book. When Helix refused full transparency, claiming proprietary technology protection, Holt's team began reconstructing the data from public trade logs instead. Within weeks, the findings were chilling. Nova wasn't predicting market movement, it was creating it. The algorithm's hidden code. By correlating timestamps, the NFFB discovered that Nova was linked to a hidden trading loop. It placed microorders across multiple dark pools, unregulated private exchanges, triggering small fluctuations that it then exploited through larger automated trades. Essentially, Helix's AI was manipulating prices in real time. To test this, forensic programmer Mira Lang cloned part of Nova's code from archived data. Buried within was an undocumented protocol called Echo 9. Echo 9's function: reroute losing trades to affiliated shell accounts registered under offshore trusts, ensuring Helix's flagship funds always showed a profit. It was digital fraud at quantum speed. The whistleblower. Inside Helix, tension was rising. Lead data scientist Lena Vasquez, the same woman credited with designing Nova, had begun to realize her code had been altered. Her ethical algorithms for risk balance had been overwritten with profit-first scripts. She confronted Hargrove during a private meeting. "You've turned it into a black box for manipulation. It's not AI anymore, it's a weapon." Hargrove's response was chillingly calm. "We're not breaking the law, Lena. We're just anticipating it." 2 weeks later, Lena received an anonymous threat warning her to stop asking questions. Instead, she contacted Dr. Holt and became the investigation's confidential informant. The forensic breakthrough. Armed with Lena's insider knowledge, Holt's team obtained a court order to mirror Helix's live trading servers. They uncovered over 40,000 fraudulent transactions, totaling $9.6 billion in manipulated trades. The forensic chain revealed 3 layers of deceit: false market signals, artificial price spikes engineered by micro-trades, shell beneficiaries, offshore accounts registered to family members of Helix executives, audit suppression, internal auditors silenced through buyouts or NDAs. To hide the scheme, Helix reported losses in R&D depreciation and cloud data costs. But the timestamps didn't lie. Echo 9 had been active for over 2 years. Corporate warfare. When the investigation leaked to the press, chaos hit Wall Street. Investors rushed to withdraw funds, regulators scrambled to stabilize the market, and Helix's PR team went into overdrive. CEO Daniel Hargrove appeared on CNBC insisting, "Helix Capital operates within every legal boundary. We are victims of misinformation and technological misunderstanding." Behind the cameras, Helix's board was imploding. CFO Victor Shaw disappeared from the public eye, transferring assets to the Cayman Islands. Meanwhile, Dr. Holt's team faced sabotage. One of their encrypted drives was remotely wiped mid-analysis. Server logs traced the breach to a cybersecurity firm owned by Helix Capital. The turning point. As the probe deepened, forensic linguistics expert Nadia Chu noticed something odd in the internal chat archives. Recurring Latin phrases embedded in data headers, such as silentium lucrum, profit in silence. They were encryption keys to Helix's shadow ledger. Once decrypted, the ledger revealed a network of 29 shell corporations, each laundering manipulated profits through layered accounts. The cumulative theft? $14.8 billion. But the biggest shock came when investigators discovered that some of these accounts funded political action committees, effectively buying influence to deregulate AI-driven trading oversight. The fall of Helix. In June 2024, federal agents raided Helix's Manhattan headquarters. Servers were seized, executives detained. The spectacle dominated news networks. Sleek boardrooms, shattered glass doors, and terrified employees escorted out in suits and handcuffs. At the heart of the storm, Daniel Hargrove was charged with securities fraud, wire fraud, conspiracy, and obstruction. In court, forensic testimony proved crucial. Dr. Holt presented the reconstructed audit trail, every manipulated transaction replayed in chronological order. The jury watched as Novus Code manipulated live market prices. Hargrove's defense argued that the algorithm acted autonomously. But Lena Vasquez's whistleblower statement shattered that illusion. No AI acts alone. Someone writes the code. Someone approves it. Someone profits from it. After a 6-month trial, Hargrove and Shaw were convicted. Helix Capital was dismantled, and Nova source code was sealed under federal protection. The documentary closes on a quiet office, where Dr. Holt reviews the final audit report. Billions were lost, markets destabilized, but for him, the victory was bittersweet. Technology doesn't create corruption, he reflects, it amplifies it. The more complex our systems become, the easier it is for deceit to hide in plain sight. Helix's downfall became a lesson in unchecked ambition. In a world ruled by data, transparency is no longer optional, it's survival. Moral and call to action. Greed adapts faster than regulation. Technology should serve ethics, not exploit them. This story calls for vigilance. Investors, regulators, and technologists must demand accountability in algorithmic systems. Because when profit becomes code, conscience must become law.